Welcome to Alpha Recap, your after-hours market wrap from stockalpha.ai. Markets closed for the day, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Hey, good to be here. The tape closed constructive. The S&P finished the day up about 0.5%. The tech-heavy Nasdaq 100 closed up roughly 0.75%, and the small-cap benchmark finished up about 0.33%. Broad participation, not just a mega-cap story.
Yeah, that breadth mattered. So what really stands out here is that tech-led, but materials, industrials, and even real estate joined the advance. That's different from a one-note rally.
Right. The headlines were a real catalyst. A chip-related development tied to a major cloud or social media player lit a fire under semiconductors and AI infrastructure names. That was the spark.
And the market tone felt cautiously risk-on. Investors behaved like they were tilting toward growth and cyclicals because they're increasingly treating the Fed as data-dependent rather than racing back to rate hikes.
Which, honestly, I was a bit surprised by this one. That data-dependent narrative gave folks permission to buy both tech and selected cyclicals.
Let's break down the sectors. Technology and communications led the rally. Semiconductors, software, cloud infrastructure. And again, the NVIDIA-related headline helped a lot.
The number that really caught our eye was how that reported tie to a major platform pushed not just NVIDIA, but a whole chain of chip suppliers and data center plays higher. It cascaded.
To put it simply for listeners, when a big customer or platform signals it's buying or partnering, it often means more orders for chips, more upgrades to data centers, and more revenue expectations for the whole supply chain. Small trigger, big ripples.
Right, and communications and media names got some lift too. Ad and streaming stocks that benefit if content and ad products get more efficient thanks to AI.
Meanwhile, materials and mining saw renewed buying after a recent pullback. Traders mentioned short covering and better industrial demand expectations. That helped broaden the advance beyond just big tech.
Industrials also held a firm session. Investors rotated into names exposed to factory upgrades, defense, and transportation. Brokers said institutional interest was growing around equipment spending if corporate capital expenditure plans hold.
And real estate. REITs got a bid from deal activity and stronger leasing in industrial and logistics properties. That's a little counterintuitive with rates still a watch item, but deal flow and leasing helped.
Energy was mixed. Some exploration and services stocks rallied on supply optimism, but integrated and refining names were quieter. So overall, the energy tape was a mixed bag, not a broad push higher.
Utilities were largely quiet today. Investors preferred cyclicals and tech, though the Callan study on nuclear decommissioning funding kept utilities on the radar for longer-term capital concern.
Yeah, that tracks.
Consumer and retail had selective winners. Store expansion news and AI initiatives around marketing efficiency helped some names. And crypto-related equities were choppy, with regulatory noise and derivatives flows creating volatility.
Let's hit the notable individual moves. NVIDIA jumped on that reported deal tie-in, which lifted the whole semiconductor complex. Robinhood gained after company-specific catalysts and continued retail fintech interest. Meta's moves also matter because any extra AI spending there helps a bunch of peers.
Cannabis names were a mixed picture. Federal policy momentum was a positive headline, but local regulatory issues kept the group uneven. And there were several micro moves tied to filings. 8K filings from firms like Bread Financial, Moody's, and Global Payments stirred volatility in individual names.
Short reactions. Right. Yeah, that was a busy tape.
A quick note on breadth and technicals. Breadth improved versus yesterday. IWM rising alongside the S&P and Nasdaq was important. Small cap participation suggests investors went beyond the biggest growth names, which is constructive for lasting rallies.
Options activity showed position building in AI infrastructure and industrial recovery themes. So it wasn't just headlines. Traders were laying down longer bets in derivatives too.
Let's explain data dependent for listeners who asked last week. It basically means the Fed will react to incoming economic numbers, inflation, payrolls, producer prices, instead of committing in advance to more hikes. So if inflation stays tame, the Fed can stay patient.
But that patience is conditional. If inflation surprises to the upside, markets would quickly reprioritize safe haven sectors. That's why traders said they had limited tolerance for upside inflation prints.
Exactly. The next CPI and PPI releases and labor market metrics will matter a lot. One tweak in wording from Fed speakers could move rates and risk assets.
Quick sidebar. The Callan study on nuclear decommissioning funding adds an interesting thread. It's a longer-term issue for utilities and municipalities because it affects capital needs and future cash flow expectations. Not a near-term market mover, but important for allocations.
Tactical tips from today. Traders should watch liquidity and options activity in AI-related names and cyclical plays. Long-term investors should consider using improved breadth as a chance to reassess sector weights. Balance AI and semiconductors exposure with cyclicals that benefit from a resilient economy.
Yeah, and remember, if gains keep broadening into small caps and cyclicals, the rally looks more durable. If the next session concentrates gains back into a handful of mega-cap names, it's more likely a headline-driven pop.
What to watch next session? Incoming inflation and labor prints, any Fed speaker comments that change the data-dependent line, earnings and guidance from mid-cap industrials and materials, and any follow-ups on NVIDIA and the semiconductor supply chain.
And geopolitical or regulatory headlines, cannabis policy moves, finance sector filings, and M&A chatter can create outsized moves in specific names. So don't ignore news flow, even if the macro backdrop is calm.
Quick reactions. Got it. Makes sense.
Short version, markets closed higher, tech-led, breadth improved. Big picture, constructive but sensitive to data.
Top takeaways. 1. Markets closed up with the S&P, Nasdaq 100, and small caps all higher, which showed decent participation. 2. Tech-led, thanks to semiconductor and AI headlines, but materials, industrials, and real estate also contributed. 3. The market behaved like the Fed would stay data-dependent. Patience likely, but conditional.
Positioning takeaway. Traders should watch options liquidity and AI/cyclical themes. Investors should think about balancing growth exposure to AI and semiconductors with cyclicals that could benefit from continued economic activity. And keep an eye on breadth and small cap action as the best signals of a real rotation.
All right, that wraps our recap for the session. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next market close with more recap and context. Good night.